Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And as promised at the end of video number one, we're going to have Dan Bird give us some tips for beginning technical analysis. How you doing, bud?
I'm doing well. So the reason I thought this would be a good topic is quite a few of your listeners have asked to be added to my newsletter.
Mhm.
And I get comments and information and conversation, let's say, from a number of them. And a lot of it, which I welcome, a lot of it's pretty interesting and good. Sometimes I get good ideas even. But I've had a few that have asked me, I want to set up some charts for technical analysis, but it's not something I've really done before. So how should I start? What kind of indicators do you recommend? What should I look at? So I thought it might be a good topic to discuss today.
Yeah, I like it. And again, I think I'm really happy. I could see the comments. People really enjoy our weekly conversations. So thank you for doing that. Yeah, let's just 101 kind of stuff. What are a few things? Don't overcomplicate it because you can't do that. You've been doing this for decades. So
Right.
what are the first 3, 4, 5 things people should think about doing?
Yeah. And then once I go through that, we can look at a few charts within the context of that, simple view of a chart. So let's start with, let me share my screen here. This is from my newsletter, by the way. If anybody would like to subscribe, let me show that real quick. If anyone is interested in subscribing, send me an email to breakpointtrading@gmail.com, and I'll add you to the list. I'll send you this week's newsletter, and you'll get the next ones from then on. This is kind of some excerpts from this week's newsletter. We talked about this in the last session that we did. So let's go to this chart here. All right, so this is what I would call my simplified chart.
Okay.
And when I first started out, I had the same question. How should I set this up? What should I do? And by the way, when I started doing this, it was based on a seminar. This is back in 2001.
Okay.
Right when the market crashed.
I remember it well.
And I didn't really know what the hell I was doing back then. So my wife signed me up for this. It was a seminar that was done in Philadelphia. Both of us went up there. Okay. And it was all about technical analysis. And I sat through it and I said, I love this. This is exactly the kind of thing that I can get into. Okay. So I've been studying it since then. But in the beginning, I had the same kind of questions. There's so many things to choose from, so many different types of indicators to use. Where do I start?
Right.
How do I do it? So after some trial and error, and it took me a little while, I finally am reading lots of books, and there's a list of book recommendations in my newsletter, by the way, at the bottom of the newsletter. That if folks want to study up on other things, they can read some of those. But I basically came down to these few indicators to get started. Now I've added a lot of things to mine just from a nuanced perspective. You've seen those in some of the charts that I've shown on this video. Yep. But to get started, I would recommend, first of all, in the price area, I would recommend using candles. Candles, these are the individual. This is a daily chart, so each one of these represents 1 day worth of trading.
Right.
And there's a whole process or philosophy or study around candles themselves, because each one will tell you a different story. They basically tell you what has been happening during the day. So this red one right here, it opened up here and it closed at the bottom. So if it closes lower than it opened, then it becomes solid.
Okay.
If it closes higher than it opened, then it becomes open.
Right.
Like this one here on Friday, even though it's red, because it actually ended the day lower than Thursday. So it ended the day lower, but it opened way down here and it traded up all day long. Okay. So it's an open candle. So the open ones are basically means that it closed higher than it opened. Okay. Okay. So, and you can do a whole study on candles. Every one of these candles means something.
Yeah, a candle does have its opening, closing,
It's
The
yeah,
change of the delta in
high,
the
low,
day.
open, close.
High, low, open, close. Got it.
Right.
Okay.
It's high, low. So let me take an easy one. Like, let's say this candle right here, it opened up here, it traded down, it traded up, and then it closed higher than it opened.
Got it. Okay.
Okay. So this little tail right here shows you what it did during the day,
Right.
but it came all the way back.
Yeah. The extent of the tail or the line is the extreme of the day, right?
That's right. So it's the low, it's the high, and then the body shows you the range, the open and close, basically.
Perfect. Open, close, range. Got it.
And this little one down here at the bottom, this is called a spinning top doji.
Mm-hmm.
That means indecision. So you can kind of understand logically what it means, because it opened here, it traded up, it traded down, and it closed but right back where it opened.
Got it.
So that means the bulls and the bears were fighting against each other. Neither one won. They came to a draw at the end of the day. It means indecision. The market doesn't know if it wants to go up or if it wants to go down. It had just as many people buying as it had selling, and they both ended up at the same place.
Let me just ask that question. That same chart, what would happen if that was red? Would it still be the same thing?
It would still be the same thing.
Okay,
yeah, it would still be the same thing.
Got it. Okay.
It's still indecision because it's basically, and even if it was red, it would still be just about closing at the same spot.
I just making sure I understood it right.
Okay. Yeah. It just open and closes at the same place, but it traded up and down during the day. So it doesn't know which way it wants to go. A lot of times that's if it's at the end of a run. In this case, this was the June low back here. Mm-hmm. This was at the end of a really vicious bearish run. Mm-hmm. Right?
Yeah.
This was that first CPI report.
I was going to say, I know that was the CPI surprise. Yes. That was the 9-1 or whatever. Yeah.
That was the 9-1. The 9-1 was actually this one here. For some reason, people the day before knew that it was coming in.
That's right. Hot. I remember that. Yeah.
I don't know how they knew that, but they did.
Somebody whispered to somebody.
Right. But anyway, vicious run down. It gets down here and then it doesn't know which way to go. Do we go up now? Do we go down now? We don't know. It ended up at the same place. That's normally, a lot of times, that is a reversal candle. But you don't know until the next one, till the second one. So if you saw that on that day, then your ears should perk up and say, I better get ready and see what's going to happen the next day. Next day it went up, so that means we're headed higher. We headed up to the 200-day. So that brings me to the next point for setting up your charts, and that's the moving average lines. I recommend to start with only use 3. Only use 3 moving averages. Use a 20-day, because I use 21 because that's a Fibonacci number. Mm-hmm. But 20 is what most charting programs will do by default automatically. Right. They'll use a 20-day. So use a 20-day. Mine is blue. I also recommend keeping the same colors for all of these things. So if you're looking at a blue line, no matter what chart you're ever looking at, you always know it's a 20-day.
Oh, that makes sense.
All right. The 50-day right here is red. That's just my choice. I always make the 50-day red.
Okay.
And then the 200-day for me, is a dashed gray line. It can be any color you want, but I just recommend always using the same color for the 200-day, the 50-day, the 20-day.
That's good advice.
Okay.
Okay.
Mm-hmm. So you've only got 3 moving averages now, but it starts to tell you what the trend looks like. If you look at the long-term trend of the 200-day, you can see that it's rolling over and it's actually trending down. Right? Okay. The 50-day, when the 50-day crosses the 200-day, that's called a golden cross. And all the big traders, mutual funds, et cetera, they look for that. They look for a crossing to the downside, which it did back here in March. So that was a big warning sign. A lot of times the algorithms will take over when that happens. There was a little delayed reaction right here, I think probably because of options expiration. But the 50 crossed over to the bottom of the 200. That's a big red flag for most institutions, and most of the algorithms are going to start selling when that happens. That's called a death cross. 50 crossing the 200. On the other side, if the 50 crosses above it, that's a golden cross. It's not there yet. Not there, okay, but it's on its way. The 20-day gives you a more medium-term, short-term to medium-term trend. Okay. So again, you want to watch when these things cross each other. When the 20-day crosses the 50, that can be positive. Now, in this case, it would have caught you right at the top, right?
Yep.
So we never use one particular indicator. That's another recommendation I'll make on technical analysis. Never put all of your eggs in one basket.
Right.
Look at the weight of everything before you actually use any particular indicator. We'll talk about the other ones in a second. All right, so the 20-day gives you more of a shorter term trend, so it crossed back over right here. So you should have been out. You should actually have been out when it went below the 200 again, and definitely should have been out when it came back, went below the 200, came up and hit the 200 and started down again. So this is the absolute confirmation right here on this particular day when it hit the 200, got rejected, and then went below the 50. Everyone watching technical analysis should have been out of the market right there.
Got it.
This is the SPY, by the way, which reflects the S&P. All right. So those are the three I recommend: 20, the 50, and the 200-day moving averages. Now, what about indicators? Now, I only have two indicators on this particular chart. One is the RSI, and I put this on every single one of my charts. This is the relative strength indicator. This tells you the relative strength of momentum. This is a momentum indicator. Relative strength of momentum compared to what this particular stock did in the past. And if you go to Investopedia, you can look up what these mean. So this is a relative strength. It will actually tell you, it will give you key takeaways. Usually considered overbought when the RSI is above 70 and oversold when it is below 30.
Got it.
Okay. It's important to understand, though, that momentum indicators work best in trading ranges rather than trending markets. So what does that mean? That means if it's moving up and down like this one is, then it can be a good indicator. So you see right here it went below 30. That's oversold. That means there are too many sellers. It's probably going to bounce, and it actually did bounce right here. And then when it gets up here over 70, that's overbought. That means there's too many buyers. And you can see right here, that's exactly what happened. When it started to come back down below 70, then it's probably going to start coming down again. Okay. See that? If it's a trending market, like we had in 2021, where the market was just going up, then what would happen is you would get this up here in the overbought area above 70. It would just stay up there because the market isn't going up and down. It's just simply going straight up. So if you're only using this for your buy and sells, then during a market like that, you would have sold. You probably would have made money. You would have sold and then waited for it to come down here again before you bought back in, but it never would have. Right. Because the market was just going up. It just would have stayed up here around 70, and you never would have had a chance to get back in again. Okay. So it's just a point to keep in mind. Now, I like to put this 40 line, so it's between 30 and 70. When it gets above 70, it's at least a warning. Okay. It should be a warning to start watching for an indication that it's going lower. In this case, it hit the 200-day and started going lower. I put the 40 because if it stays above that, then that means it's a bullish trend. All right, so you can see back here as this market was going down, it was getting up to the center line right here, but mostly it was staying around this 40 line, except for this one period here in March where we had that nice rally, and it went up and almost got to 70. But now we're staying above that 40 line. This is one of the reasons why right now it's different than it was these other times when these were bear market rallies. And people are saying that, again, this is just a bear market rally, just like we've had before. We've had two other ones this year, and every time it goes up, it goes back down. We're doing the same thing. We're right about at the same place where it was before. We're going to go back down. Well, it's not quite at the same place it was before. Right. Because it's staying above this 40 line now. So the relative strength is better. The one at the bottom is the MACD. This is the moving average convergence divergence. Now remember, these are moving averages right here, right? So what this does is it tells you how far away those moving averages are from each other. And whether the momentum is up, in other words, is the 20-day above the 50-day, that would make it go up, or is the 20-day below the 50-day, that would make this go down. Okay. You see that? So it's just giving you a better visual of what the moving averages are doing. And this is a good one too. And you really should use all of these. So if you use this one, it's above 70. This hit the 200-day moving average, and this one's rolling over right about here. Then that's your signal to get out.
Got it.
Same thing down here. Down here, the MACD line moved above. The histogram tells you the distance away the moving averages are from each other. This tells you the momentum. Is it going up or down?
Yeah.
So this one right here crossed over. At the same time, we had this RSI. Usually the RSI crosses first and then the MACD. So you see the RSI going below 30. That's your clue to get ready that we might be ready to rally. We weren't quite ready because it actually had another low to hit, but the MACD didn't really start going up until here. All right. So in October, that was the sign that we're headed higher.
Okay.
Those are the only ones I would use. And I would then just get used to what they're telling you. Don't try to anticipate. Don't say, oh, right here, it looks like this one's rolling over. So right about in here, it looks like it's going to cross right here. Right. It looks like this one's getting ready to cross below 0. So I'm going to get out. Well, it hasn't crossed yet.
Right.
So don't anticipate what these are telling you. Wait for them to actually give you a signal.
Okay.
But the most important thing, and we talked about this in the very beginning about learning French, you know, after a while, you just look at something, you just automatically know what it's telling you. You don't have to think anymore. You don't have to try to interpret what these mean anymore. You just know. And that's the way to treat this. Put these very simple moving averages, 2 simple indicators, and just get used to what they're telling you.
Okay.
And over time, you'll start to interpret them and you'll say, oh, I know what this is doing. This market's getting ready to roll over. We're heading down.
Right.
So then sell, get out, or go short, and then just wait for these to give you a signal to get back in again. Okay. Now, one of the reasons I think we are at a different place this time than we were before is because we went through the 200-day, but we did over here too. This one went through the 200-day. The 200-day was not rolling over yet up here. But right here, we hit it and got rejected. Right here, we're right at it again. Okay. But based on what happened on Friday with that jobs number, the market should have gone down.
No, I agree.
That was
odd.
That was a very strong job number.
Unexpected, yes.
Unexpectedly strong number. And the market did open lower. You see the market open down here.
Yep.
Look where it opened. Can you see that?
Yeah.
Right at the 200-day. 200-day is a very important indicator. And if you're just beginning to do this, I would actually use the 200-day before you buy anything. Make sure any stock that you're looking at is above its 200-day moving average, especially if you want to go long-term. So let's look at, you had a couple, JP Morgan.
Yeah.
Let's look at that in the context of this simple chart pattern.
Okay.
So there's JP Morgan. You see the RSI up here? See how it's over 70, but it's staying over 70? That's because the price is just continually going up.
Yeah, I bought it right around the 17th for 104.
Right. Yeah, way back here. That was a great entry. By the way, look at the MACD right about here.
Yep.
Just crossing over. And the RSI had already hit 30 over here. So that was your early warning signal. Start looking for other confirmations. MACD gave you a confirmation. So you got in at just about the perfect time.
Yeah, the only problem is I only got one of my 3 tranches.
Right. Right. So what typically happens, and look at where the 200-day moving average is. It's well above the 200-day. You see the 50 and the 200 right here?
That's crossing, yeah.
What did I say that was? What's that called?
Golden cross?
Golden cross. That's a golden cross. That's where all the algorithms are going to step in. The other thing with a strong stock that's moving up is the big institutions are going to look for places to start adding. And the first place they might look is the 20-day moving average. You see on Friday, it hit the 20-day and then started back up again.
Yep.
So I think algorithms kicked in right there on Friday.
Okay.
And they might kick in again because of the 50-day crossing the 200-day. All right. So this is a good example. Now the MACD is still trending down.
Hmm.
So that's a bit of a red flag right there.
Good.
So remember I said
It's
that,
run 30% in like a month and a
yeah,
half. So
yeah. Look at that. It's gone from 102 to 138.
yep.
Yeah, 30%. So remember I said that we may be going into a period in the next week or so where the market is likely going to correct a little bit, and or take a breather at least and go sideways. So that might be what is happening. Maybe this is what this is telling you with the MACD. So it hasn't crossed up yet.
All right.
All right. So that's JP Morgan. What was the other one? Blackstone?
BX. Yeah.
BX.
Yeah, BX. I bought my second tranche on Friday.
The Blackstone doesn't look as good. Does not look as good as JP Morgan.
No, it does not.
So what do you want to interpret this? What do you think? What would you call? What would you say here?
Well, let's see. So it's trading down the, what is that thing on the top called? RSI?
RSI. That's relative strength.
Yep, getting lower, but not getting to
But
the
still
blue line, which
still
I
above
think,
40. Still above 40.
still above 40. It's trading below its 200-day, 50-day, and 21-day.
Yep, it's trading below all of its moving averages.
Yep,
That's not a good. That's not good.
Not a good thing. And the MACD is down, so not a good stock.
Right.
The stock itself is not trading well.
Right, that's right. And the 20-day looks like it's getting ready to cross back over to the downside of the 50-day.
That's true. Did not see that. Yes.
So it's a dicey trade right here. If you want to add some, I would wait a little bit to let it prove that's headed back up.
Yeah, I've got two more tranches.
I'd be watching this MACD.
Okay.
I'd like to see it head higher and actually get above zero.
Okay.
So like right here. So right here, the line itself was still below zero.
Right.
But the histogram went above zero and had a brief rally right there when that happened.
Okay.
But I would wait for this to turn up before I would do anything with this one.
Sure. I like it. Sounds good to me.
Are there any others you want
to? Look at Meta. What the hell?
Yeah. Meta. Ah, look at that. That one's looking good.
Yeah, I bought two tranches of that too, but it's not a dividend stock, so I'm not counting it.
Right. Yeah. So Meta is above its 50. The 20-day is coming up. Might be crossing here soon. The MACD is above zero. The line's not above zero yet, but the histogram is. Yeah. And the RSI, you can see how the RSI stayed below 30 for quite a while. Yeah. During this whole downtrend.
Yeah, I got two tranches in that area.
In fact, if I put this line on here, if I was looking at just the RSI, it went down right there the day before earnings. Yep. And the MACD was already below zero. I would have said, I'm going to wait till after earnings. I'm not going to do anything right here. Right. And then after earnings, the RSI just stayed down there, oversold. People continue to sell down here. The RSI stayed oversold. The RSI went above on November 7th. Yeah. The MACD had not gone up yet, but remember I said that RSI usually signals first. Yep. So if you're really an aggressive trader, you would have said, oh, the RSI just went above 30 right there. Yeah. This is the time to buy right here, November 7th.
I got my first at 98 and then my second at 91, I think.
Yeah. So that's 98, probably right there. Yeah, that was a good buy actually. And then it looks like it came back down to the 20-day. See how the 20-day kind of acts as the yep. Remember I talked about reversion to the mean? Yep. That's the 20-day is reversion to the mean. Cool. So it looks like it came back down there and now it's started to head higher again. I think there's a good chance of this heading up back to the 200-day.
Oh wow.
Around 160 to 170.
That'd be almost a double.
Yep, especially as we head into the best time of the year.
Mm-hmm. Very cool. Well, Dan, do me a favor. We got to call this. What is your newsletter one more time?
Sure. breakpointtrading@gmail.com. Just send me an email and I'll add you to the list. send you last week's newsletter.
Awesome. Thank you so much. We will see you next weekend.
Sounds good. Have a good
Thanks.
weekend.
You too.